Too late? Maybe not. Maybe you should never do anything based on taxes. What do you think?
Yeah, I mean, that's what the smartest accountants are telling their wealthiest clients right now is don't make portfolio changes just because of taxes. But let's lay it out first. President Biden, the House, and members of the Senate have all proposed increasing the capital gains tax on high earners. The president wants a rate of 39.6%, the House 25%. But an even bigger source of disagreement is the timing, and that has caused mass confusion right now for tax planning. President Biden announced that his capital gains tax should be retroactive to April. That's when his plan was announced. The new House plan gives a start date of September 13th, when its plan was released. Tax advisors say some clients right now are racing to sell businesses, stock, and property, hoping for a possibly even later start date after passage of any bill that we might get. Now, others are looking at all of their sales between April and September to try to figure out what their tax rates will actually be. All of this matters to the government because a tax foundation analysis found that if the capital gains tax takes effect on January 1st, 2022, and investors have a chance to sell beforehand to avoid that higher rate, revenue from that increase would be $50 billion less. So the government right now does not want people to sell. There are some betting that perhaps they can and still get out ahead of it if there is not a retroactive date, or that retroactive date is later than right now.
Yeah, that's so great, Robert, that I don't know. Would the government really we see what you're thinking about doing, so we're going to change the rules of the game retroactively. We're going to get you either way. Would they really do that? Does that seem... We hear a lot about fair. We got to be fair. We're going to be fair. Pay their fair. Fair here, fair there. Corporations, fair, fair, fair. Is that fair? Change the rules so that you can't do anything about it before you...
Well, the Supreme Court ruled in 1993 under the Clinton tax increase that retroactivity is constitutional, and you know we saw in the previous increases of the capital gains tax in the 1980s and 1986 and in 2012 that there was massive selling ahead of that then reduced capital gains revenues going forward. So they don't want to do that again. They want all the revenue.
Right. I don't know. I want to talk about the Constitution, just talking about, I mean, we use fair. It's the most nebulous term in the world, and there isn't a single politician that doesn't use fair just about every sentence. So if we're going to use it, you know, not necessarily constitutional, but it's been this way. You count on that. You make your plans about the future and your nest egg and your retirement and, you know, your kids and everything else. And then, we're going to change it, but you might try to take it, you know, you might try to deal with that, so we're going to make it so you can't even, I don't know whether that's fair, but.
Shepard Smith here. Thanks for watching CNBC on YouTube.